Let's get to 1,000 subscribers. Please help support Joni and our team by subscribing and turning on notifications.
Hey everyone! Have you ever seen a news headline about a stock soaring or plummeting and wondered what happened? Or have you ever wanted to invest but had no idea where to start? Well, today I'm Tom, and I'm going to take you behind the scenes of the stock market. We'll explore what's driving the latest trends, which will help you understand the market and spot potential opportunities. So let's dive right in.
Joy Up Invest Podcast. Invest better every day. Hello everyone, welcome to Market Rising, the show that brings you the latest updates on the Asian and European stock markets from the past week.
Let's start with a general overview of the Asian and European stock markets over the past week. To put it simply, the market had a mix of emotions last week. Some markets were bright, while others were a bit gloomy. Let's see how each one performed. Taiwan seems to have been hit the hardest, especially in the electronic technology sector, which is the heart of this market. TSMC, the giant chip manufacturer, saw its value drop by more than 3.40%, and other stocks were also in a downward trend. South Korea's overall outlook is quite concerning, especially in the producer manufacturing group, where most stocks were in the red and major companies like Samsung saw their value decrease. On the other hand, mainland China appeared to be the strongest market overall. Most stocks in this market moved upward, making it one of the markets where investors have the most confidence. Other markets like Japan, Hong Kong, Vietnam, and India had a mix of rising and falling stocks, which we'll look into more deeply later on.
Now let's cross over to Europe. From a big picture view, we can see the market had mixed movements, but most of them were in the red or in a downward trend. This was especially true in the technology and industrial sectors, with stocks like SAP and Siemens dropping significantly. However, stocks in the consumer non-durables group, like Nestlé and L'Oreal, and in health technology, like Novo Nordisk, performed exceptionally well and were bright green. This shows that even when the overall market is down, there are still great stocks that can withstand the pressure. Let's continue with some individual stocks from last week that are worth watching. First up is the story of Chinese chip stocks surging amid Nvidia's issues. The big news that caused a stir in the market was that Chinese chip stocks surged, going against the trend of a major company like Nvidia. Many people probably wonder, what's going on? Well, here's the story. Nvidia, the American chip giant, has been having issues with the Chinese government, leading to reports that it might temporarily halt the production of its H20 AI chips in China. So when Nvidia, the #1 player, slows down, it immediately creates a gap in the market. And who stepped in to fill this gap? The Chinese chip companies themselves. Whether it's SMIC, China's largest contract chip manufacturer, or Cambricon Technologies, which is seen as a competitor to Nvidia in the Chinese AI chip market, the stocks of these companies have been soaring. Some even hit their ceiling or their maximum daily increase. This situation reflects the ongoing war of technological competition between the US and China. And from an investor's perspective, this is an opportunity. The Chinese government likely doesn't want its country to rely too much on foreign chips, so supporting domestic manufacturers is inevitable. This will allow these companies to grow by leaps and bounds in the future. Besides the chip story, there was also other good news from several Chinese companies. Let's start with Kuaishou, the famous short video app. It reported impressive Q2 earnings, with revenue growing over 13% and its e-commerce segment performing strongly with GMV, gross merchandise value, increasing by 17.6%. In addition, the number of daily active users, or DAU, continues to grow. This is a sign that the company's core business is still strong, and the growth of its loyal user base is a key factor that will help create long-term business value. Because the more users it has, the more opportunities it has to generate revenue from advertising and e-commerce. Now let's move on to Xiaomi. Its Q2 revenue surged by 30%, driven by strong sales of electric vehicles and smartphones. This is a sign that Xiaomi is expanding its empire from smartphones to vehicles and is becoming a significant player to watch in the EV market. This is a crucial transition that will create new value for the company and will make Xiaomi not just a tech company, but a company poised to become a leader in electric vehicles in the future. Meanwhile, PopMart, the producer of the popular collectible toy Labubu, is also doing well. Its stock surged after the CEO revealed that annual revenue might be much higher than the original target. This shows that collectible toys are no longer just toys. They are assets that can generate massive revenue. The long-term value of PopMart lies in its ability to build a strong brand and create new characters that can become cultural icons in the future. Lastly, Baidu. Even though its total revenue was lower than expected, the interesting part is that its AI cloud revenue grew significantly by 27%. This reflects the company's transition to becoming a leader in AI, which is a business with very high growth potential. This is what investors should be watching, because investing in AI cloud is like building a foundation that will create stable and sustainable revenue in the long run. Now let's look at some stocks from Japan and Europe. We'll start with Toyota, the giant of the automotive industry. Recently, analysts from the firm Bernstein upgraded their recommendation to outperform and significantly raised their price target. What's interesting is that Bernstein believes Toyota has a chance to reach its return on equity, or ROE, target of 20% faster than the company anticipated. This is because strong hybrid car sales and a diversified business strategy give Toyota a favorable position to handle the changes in the industry. This is a great example of smart and forward-thinking management, which is a key factor in creating long-term value for a company. Next is Fast Retailing, the owner of the famous clothing brand Uniqlo. Recently, analysts at CLSA downgraded their recommendation to hold. The reason is that the stock price has risen so quickly that it's almost at its price target, which makes the risk and reward now less attractive. However, analysts still acknowledge that fast retailing has a strong competitive advantage that is difficult for anyone to replicate. Therefore, the value of Uniqlo isn't in its short-term stock price surge, but in its ability to create a unique brand and expand into global markets in the long run.
As for UBS in the European stock market, the global investment bank has kept its investment in Eurozone stocks the same. Even though the overall economy is still uncertain, UBS believes that the recovery in corporate profits in Europe will begin in 2026 and continue to grow in the following years. UBS predicts that the Euro Stoxx 50 index will reach 5,500 points by the end of this year, which is a positive long-term outlook. This is a signal that even if the market is slow in the short term, the fundamentals of the market are still strong in the long run and have the potential to recover.
Additionally, amid the uncertain overall picture, there are still standout companies like L'Oreal, the beauty giant, which continues to maintain strong performance, going against the trend of its competitors. This shows that even in a challenging economic climate, companies with a strong brand and good management can still grow. The ability to maintain market leadership during a volatile economic period is the clearest indicator of a business's long-term value. Finally, we have Novo Nordisk, a Danish pharmaceutical company that produces the famous weight loss drug Wegovy. Recently, the FDA, U.S. Food and Drug Administration, granted an accelerated approval for Wegovy to treat MASH, a type of fatty liver disease, making it the first drug in this group. This is great news that caused the company's stock to surge immediately. The fact that a pharmaceutical company can continuously develop and get new drugs approved is a key factor in creating long-term value for the company, because it means market expansion and more opportunities for revenue in the future. And that's all for the interesting news from the Asian and European stock markets over the past week. You can see that the world of investing isn't just about boring numbers. It's a story that is connected all over the world. Whether it's political conflict, technological transformation, or the surprising growth of a small company. Understanding these contexts will help us make more rational investment decisions. For today, Tom would like to thank Investing.com and TradingView for providing the data for our discussion. And with that, Market Rising is signing off for now. We will be back next week with more great information and insights. I hope everyone invests wisely and may your markets soar. And remember, everything I've shared today is just my personal view, not investment advice. So please always do your own research, think it through, and keep in mind, investing always carries some risk. Before we call it a day, don't forget to like, share, and hit that notification bell on JoyUp Invest so you'll never miss our daily bite-sized insights from markets all around the world. Now I'm curious, what stocks are you holding right now? Go ahead, drop a comment. Let's talk about it. All right, that's it for today. Catch you in the next one. Bye!